I'm going to share with you a great buy and hold trading strategy. So stay tuned to the end because I'm going to show you how to pick the stock, how to manage your portfolio, how to make money long term. It's going to be an in-depth video. It's going to be a while, but you want to pay attention to the whole thing because I got a lot of details. And it's not going to be too boring. At least I hope it is. If it is boring, let me know in the comments. If it's useful, let me know in the comments. And don't forget to like and subscribe. So the first thing is buying and holding. Is buying and holding dead? Is it dead? I've heard people say that. As a matter of fact, I read an article that said that millennials don't like to buy and hold. They like to do short-term investing. But you know what? Here's the thing about buy and hold is it's created the most millionaires of anyone else of all time in the history of trading strategy. So does that mean that you want to pay attention to the buy and hold strategy? Yes, it does. So if it's creating a lot of millionaires, we want to pay attention to that. So let's go into it. So the first thing is buy and hold. What does it mean? Well, it means that you buy a stock and you hold it. Now, the way that I like to do it is if it's losing money, I get out, right? I get out. So that's part of it. I don't hold losers. You only hold winners. So basically a buy and hold is you hold it and you find great stocks and you buy them while they're going up. But does it still work? Yes, it works great because you want to find stocks that increase in value and you want to find them a lot. You want to continue to do this over and over and over again. And so there's a couple different things that I want to really hammer about this strategy. Number one is you want to use compounding, okay? And so the definition of compounding is that if you take your profits and you roll them back into your other profits. So if you invest $1 and you make $1, you want to roll that dollar back in. And so now you're going to be trying to make money on $2 instead of $1. Well, then if you make $2, you roll those $2 back in, right? So that's now $4. And so you just keep rolling it in over and over again. And, you know, here's a chart that says if you double a penny every day for a month, that's $10 million in a 31-day month. You can see the nice little chart here. So it's a great way to increase your wealth, and it's called compounding. Okay. Now the next part of it is consistency. So I call it 2 C's. The 2 C's. 2 C's. Consistency and compounding. Consistency is just doing that over and over again. You compound once, you compound twice, you compound again. Another way to be consistent is if you only have $50 to put into your trading account, well, you just add money every month, every payday, right? You work somewhere locally around here. Maybe you work at Sheetz, right? Every time you get paid, boom, $50. Okay, I got paid again, boom, $50. Got paid again, boom, $50. Every single time you want to add that money to your account. Look, I know it costs money to make money. It costs money to eat. You got to live. You got to, buy your food. You got to pay your rent. You got to do all those things. But listen, a lot of people, you guys might be living at home, right? You sock that money into the market, you're not going to regret it, right? And so just keep doing that. We talk about like the tortoise and the hare. You ever seen that story of the tortoise and the hare? We all know what it is. The rabbit lost. He jumped out of the gate really fast, but he lost the race, right? And I see a lot of traders do that. They invest, they make money, but then they quit. Or they make a lot of money and then they buy something. They make a lot of money or then they do something stupid and lose it. We got to be consistent. Consistent. Compound, invest, stick with it. And if you do, you'll do really, really well, right? Here's a great example. McDonald's, if you would have done this for 50 years, you would have made $13 million, okay? And that's if you're investing $100 a week, 100 a week, 100 a week, 100 a week, consistently. And then if that's one example, you could probably do much better than that if you roll it into different things. Once you make a profit, you roll it into the next big thing, right? So consistency is really important. Now, there's 3 primary buy and hold strategies. I just wanted to explain the consistency part and the compounding part to show you how these rich people get rich. That's how they do it. Now that we have that component in place, what we want to do is work on the strategy. Okay, so this is a strategy that I use, and I got it from Richard Koch, and it's called the STAR principle. Okay, and it's basically two things. Number one is you buy something that's growing. It could be something that's a new industry that has a lot of room for growth. If we look at examples of this, something that was new was when Ford came out with the car. That was new. McDonald's, when they came out with fast food, it was new. Ford was the leader. McDonald's was the leader. You know, we look recently, Google was new. The internet, search engines is new. Netflix, it's new. Streaming services, right? It's a new and growing field. And then, so that's part one. You just find something that's growing that has a lot of opportunity to grow, right? And there's new industries all the time, and it's always happening. The second part is you find a leader in that field, right? Because usually the leader rises to the pack, and I always look at the example, the best is always the best, right? We look at sports like Wayne Gretzky, he was the best hockey player, Michael Jordan, you know, Tiger Woods, these guys are the best, and companies are the same way. If you pick the best, they're gonna rise to the top. So if you have a growing field and you pick the best, well, then your chances for growth are really, really good. And that's the formula. It's a really simple formula. It's easy to follow, and it's easy to execute. Now, I do have a company that researches and finds these trades. We call it Dream Trades Market Research. You could jump in and let us do the research for you. But you don't have to. You can do the research on your own and do really well. Okay, and here's an example right here. Netflix, if you would have got in on Netflix in 2005, and you only put 1,000 in it, well, that was, or 10,000 rather. You put 10,000 in Netflix in 2005, it's 1.7 million. So that is the advantage of picking a leader in a new field, and that's the STAR principle. And I link to the book as well if you want to do your own research there. So another factor is if your company's losing money, if you're starting to lose, we're going to have to jump ship. If you're down 30%, 20%, you might say, okay, this isn't working for me. So there's two options you can do there. Number one is you can just bail and find another company because there's always a new growth company somewhere, right? You can do that. Or number two is you just wait until the company starts going up again because it might be just a sideways market. Sometimes it goes sideways. And then you just want to put your money and hold it until it's time to get back in. But evaluate the company. Is the company still growing? Is the industry still growing? Are they still the leader? Maybe a competitor passed them. Maybe they made a mistake. Maybe something came up that they weren't anticipating. Things happen in life. We don't always anticipate what's coming our way. But you want to evaluate the company. And if it's losing, start evaluating. Ask yourself those questions. What challenges came up? What obstacles came up? What happened to cause this company to start going down? So another great part of this principle, and it deals with the consistency aspect, is dollar cost averaging. If you can dollar cost average, which basically, let me give you a quick definition of it, is if you dollar cost average, it means that you buy a stock for $100, okay? And it goes down to 50, and well, then you just want to buy it again. But if you spend 100 and bought one share, and then it goes down to 50, you spend another 100, you get 2 shares now. 2 for the price of 1. Pretty good price, right? And if you still believe in the company. If you don't believe in the company, you don't want a dollar cost average. But if you still believe it's still a leader, it's still a star company, it's still really solid, well then go ahead, get in. You just got in at a discount. So now when that stock goes up from $50, it goes back to 100, you just made $34 per share. Your average price to get in is now $66. That is a home run. So dollar cost averaging is really a solid way to make money in the markets using this buy and hold strategy and the STAR principle. Again, if it's a loser though, like Apache, I'm pulling up a chart of Apache here. Apache's gone down for 10 straight years. You just want to sell it, right? You just want to get rid of it. You don't want a dollar cost average a total loser. Dollar cost average winners, not losers. All right, now the second strategy with buy and hold is the dividend strategy. And a dividend is a company that pays you for owning it. It's a really sweet deal. I own ExxonMobil. They pay me for owning the shares. I love it to get paid. Basically, when you buy a stock, you're like buying an ownership of a company, and so they pay you. It's like a dividend. It's like holding rent. It is a dividend. And so it's really a cool buy and hold strategy. So you can find companies that pay you a dividend, and you can get paid every single month, okay? Now, how do you do that? Well, the first thing is you find a company that's increasing in value, right? You want it to be a good company. So then the next thing you want to do is you want to find a company that has a good dividend. And you can use that using the Yahoo Finance Stock Screener. The link is in the description. And if you use this dividend calculator, you can see what type of companies pay a good yield, a high percentage of dividend. And so I went and I found a stock calculator on MarketBeat, and it showed me that if I put 100,000 in and I got an average of 5% dividend, I would have made $74,000 in dividends, and the profit on this stock would have been $1.3 million in just 20 years. So again, it's another really solid strategy is to use dividends. And you can mix it up. You can do a portion of your portfolio for star, or you can use a portion of it for dividends. You can go half and half if you want, right? You don't have to do, you could do all dividend if you want, or all star. Star is going to be faster growth. Dividend's going to be a little slower, but it's a little safer. And then the third one I wanted to explain about is the ETF buy and hold strategy. Now, ETFs are exchange traded funds, and what that means is it's a basket of stocks. So like, for example, the ETF is SPY for the Standard & Poor 500. They take the best 500 stocks in the U.S. stock market. So you take 500 of the best stocks, you put them together, and it's one stock, SPY. And the advantages of that is that it diversifies and eliminates risk. So let me use the Walmart example, right? Let's say you want to buy Walmart, but you want to spread out your risk. Well, if you just buy Walmart and the stock tanks, like let's say that something really bad happens to Walmart. I don't know what it would be. All their stores, something bad happens. One of the products kills people or something crazy like that. Well, Walmart just tanked 5,000% in one day. It's literally trash, right? Well, if you're holding Walmart, you're hurting bad. But if you buy the SPY, which has Walmart in it, the SPY only has a small little dip. So it protects you from big dips, right? That's a huge advantage of it. Now, a disadvantage of the ETF strategy is if Walmart takes off and goes up like $8 million in one day, well, you're owning a big basket of stocks and you only get a small gain because the basket of all the other stocks that didn't go up hurt you a little bit. So that's the third one, is the ETF, and they have ETFs in every category. They've got exchanges like the S&P 500, they've got gold ETFs, they've got energy ETFs, they got healthcare. There's lots of different ETFs, and we have a link to all of the ETFs in the description. You can check out all of the ETFs. A very cool way to trade. Okay, so those are the three. We've got the star, we've got dividends, and we have ETFs. Now, one other thing I wanted to mention, which is fractional trading. So if we're going to do consistency, like back in the beginning, and we put $50, $50, $50, every week you want to put it in, well, guess what? You can't buy $50 of Netflix because it's $400 and some a share, right? You can't buy $50 of Tesla because it's $600 and some a share. That's where fractional trading comes into play. And what that means is you put $50 in and you buy a piece of that stock. So Netflix, you buy 0.25 or 0.173 or 0.111, whatever it is, you do that. And so you want to find a broker that allows that, and not all brokers do. My preferred broker for doing that is M1, and you can put $50 a week in automatically, $50 a month, every 2 weeks, and it will automatically buy your entire portfolio. So if you have a bunch of star stocks, a bunch of dividends, and a bunch of ETFs, it will automatically buy it. You just set it and forget it, and it automatically does it right out of your paycheck every week, like clockwork, and you're growing your wealth automatically. Plus, there's a bonus. You can get a $30 bonus if you open using the link below in the description. So that gets you started on the right track. You get $30, just click that link and you can do it. That's the one I use. I highly recommend it. So just a few other things about buy and hold. It's a great strategy, and it's great for crypto trading. It's great for Forex trading. You can use the same type of thing. And if you want to get some more insight, there's some good forums on Reddit. One I recommend is Value Investing that will give you some good companies and just some good strategies. And then it's unlimited possibility. Basically, there's no cap on it. You can make whatever. It's where all the rich people got rich. And then the last part is, if you're a beginner, if you've never traded before, if you don't have a lot of time, if you don't want to be a day trader, if all those things are true, this strategy is perfect for you. And so I'd love to hear in the comments about how you use this strategy. If you haven't started, go ahead and start doing it. We really recommend that you give it a shot. Try this buy and hold strategy. Let me know in the comments. I want to hear about it. If you have questions, I want to hear about it. If you think it's really cool, I want to hear about it. If you think it's stupid, I want to hear about it. But whatever it is, just leave a comment, engage with us. That's why the internet's so cool, is because we can engage with each other. All right, well, that's it for today. I surely hope you enjoyed this video. Make sure you like and subscribe, because I got a lot of good content coming up, and you don't want to miss a single second of our content, because it can have an impact on your financial future if you don't catch our videos. All right, well, that's it for today. Thank you.